Good afternoon, ladies and gentlemen, and welcome to the SOURCEBIO International PLC final results investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of the screen. Just simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we'll send you a quick email to notify you when they are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll. If you would give that your attention, that'd be great. And I'd now like to hand over to Jay LeCue, Chairman, Tony Ratcliffe, CFO, and Russell Wheatcroft, COO from SOURCEBIO International. Good afternoon to you all.
Good afternoon. Thanks, Mark. Thanks to everyone for dialing in. Welcome to the final results presentation of SOURCEBIO for December 2020. My name's Jay LeCue. For those of you that have not dialed in before, I am the Executive Chairman of SOURCEBIO. I joined in 2016 as non-exec chair. Shortly after that, we realized we needed some additional focus on the business, so the board asked me to become Executive Chairman in early 2017. I've got about over 20 years experience with life science companies, primarily in the UK, both listed and non-listed. I was recently Executive Commercial Director for BioQuell PLC prior to it being acquired by Ecolab. I think most applicable to Source is my experience as CEO of Celsis International. And for those of you that remember Celsis, it was a bit of almost a plane crash, and I was put in to turn it around and fix the business, which we did. Took it private in 2009, and it was one of the most successful investments for Harwood Capital. And I think Source is similar to that, is that we've got a great opportunity ahead of us, and it did need some work to fix the business, and we've done that, and we're moving the business forward. And I'll turn that over to Tony.
Okay, thanks, Jay, and hi everybody. So my name's Tony Ratcliffe. I'm the CFO of Source. My background is I'm a UK chartered accountant, trained with KPMG, and have an MBA as well. And similarly, something like 20 years plus of experience, actually entirely in fast growth businesses, and essentially all with ambitious expectations. And the common theme has been very much building shareholder value. And hopefully I've got a very sort of relevant all-round experience, lots of financial experience, obviously, also operational, lots of transactional deals, lots of M&A, and we've had a fair amount of that on the AIM market. Obviously delighted to be part of Source as it continues its growth going forward.
Good afternoon. Hi, my name is Russell Wheatcroft. I'm the COO here at Source. I joined Source back in 2014, but since 2017 I've been working alongside Jay, building the business that you see today. I'll hand back to you, Jay.
Thanks, Russell. Just to give everybody a sort of a very 10,000 foot view of the business, we are a leading provider of laboratory services to blue chip pharma, NHS, and private hospitals. We've got four major businesses of SOURCEBIO today. We delivered almost 51 million in revenue in 2020. 35 of that almost came from our infectious disease testing business, which was started from a scratch in May of 2020. Healthcare diagnostics, 4.4 million. It's down a bit on last year. That's resulting from the delay in elective surgeries. This business is primarily cellular pathology, and because of the delay in elective surgeries, this business certainly was impacted a bit. Just to give everybody some understanding of the infectious disease business, we got into that business as a hedge against healthcare diagnostics declining, and I think we did more than hedge the business. We've got a new division that's performing very, very well, generating lots of cash and earnings for us. Our genomics business, 4.2, actually did pretty well. Q3 and Q4, we got hit in Q2, and Tony will get into that in a minute. Stability storage, nice business, recurring revenue business, high gross margin. Was impacted a bit by the COVID situation, but that's a business that we're looking to generate additional revenues and profits moving forward. We talked about the dramatic growth of the business, almost 51 million in sales, adjusted EBITDA 14.2 million. We did a successful AIM IPO in October, allowed a faster ramp up of our COVID testing business, and also allowed us to restructure some debt. And we also were able to do wider routes to market for COVID and also some of our other business platforms. We've invested significantly in the business, both pre and post IPO. and we are very well positioned for future growth. And we're seeing that, especially on the COVID side. We're gearing up for the return of elective surgeries. And we've got a very solid blue chip customer base. We are dealing with some of the best companies in the world, and certainly our accreditation and our quality levels speak to that. They need that if they're going to be dealing with laboratory services providers. Just some operational highlights, and some of these are a bit repetitive, so I may not touch on every one of these, but we did successfully complete the IPO in October, delivered 120 million market cap with a 35 million pound raise, as I said, to fund our COVID business and also restructure some debt. We do believe there's potential upside to what appears to be a longer term COVID situation. We believe there's going to be a need for testing extending, certainly through 22 into 23 and 24. We're hearing that from our customers and also some analysis that's been done. Infectious disease, a business starting basically from a standstart in May. I talked about that. Initially was only PCR testing out of Nottingham. And we've evolved the business from there. We now are getting involved in mobile units. We're getting involved in different technologies, Oxford Nanopore being one of those, where we're supporting the mobile trailer activities, which I'm sure you've seen on the news. We have an agreement with a leading high street pharmacy retailer to support testing across the UK. We're at about 65 stores now. The plan is to get into 500 stores, and very much the focus is going to be on the travel market post July 1st, when travel restrictions hopefully are lifted. We did expand into San Diego, and I talked about that, or I'll talk about that in a minute. And then the RFU agreement we recently announced is just to show the importance of on-site testing for sports, entertainment. That's another area that we're increasingly getting into. We have been accepted into the capacity framework from the NHS to help reduce the backlog of elective surgeries, and that is picking up. That business is picking up. It's certainly not where it was before COVID, but we do see that starting to pick up as we move forward. Tony, I'll hand this one over to you.
Okay, thanks, Jay. So quick sort of overview of financial highlights, if I could. So, clearly you've heard that we delivered 50.7 million of revenue, strong growth on 2019, up 139%. Clearly that's been dominated by COVID testing, but we're actually pleased with the performance in all 4 business units. So we're going to drill down into each of those 4 business units shortly in turn to give you some color on that. In terms of gross margins, essentially we maintain gross margins at 40%. What's perhaps more dramatic is the impact really on the bottom line and the earnings per share. So from an EBITDA point of view, essentially we grew EBITDA from 3 million in 2019 to 14.2 in 2020, so nearly 5-fold growth. And the reason for that really is that we've essentially leveraged our existing cost base and infrastructure. So we've got obviously the same facilities, we've got the same LIMS systems, we've got the same accreditations, etc., QA systems, and we've really put very modest additional cost to deliver that significant growth in revenue. So that's really been key to the bottom line. In terms of earnings per share, you can see here we've really moved from 1.7 pence per share on a sort of like-for-like basis, adjusted, to nearly 20 pence per share in 2020. Significant growth, and I think it's worth highlighting that in fact we were significantly ahead of our house broker Libram's forecast, which had us in at 13.5 pence per share. So just a few words on cash generation. To be honest, the challenge we had leading up to the IPO was all about working capital. As we were growing so fast, it was a working capital challenge. It wasn't a CapEx challenge at all. We put very modest CapEx to work. It was all about managing receivables, managing an inventory in a period of rapid growth. And so obviously really pleased to see strong cash generation in the year, up to 6.4 million, up from 2.9 in the prior year. And we've ended the year really with again a very strong balance sheet, 8.4 million of cash, and to reiterate Jay's point, 0 debt. So we had very substantial debt in 2019. That's all been sorted out. So we've really got a cash dominated balance sheet, no debt, and I think that puts us in a really good position clearly to continue to grow both organically and inorganically.
Good, thanks, Tony. Just going back to infectious disease, sort of an overview of the business. Some of this has been stated in the previous slide, so I won't touch on every bullet point here. Business revenues we've talked about. We did talk about the need for testing both shorter and longer term. One thing that we have done, and I think it's important to point out, is we initially started with support. We were supporting the DHSC and the NHS and private hospitals, and we're still doing that. But we also realize there's a bigger market for travel, sports, entertainment, employers who want certainty. You can get free lateral flow tests that aren't really that accurate for your workforce, and many companies are realizing they want more certainty than that, and we're signing those up. So that there are areas we're focusing on beyond just healthcare at this point. We are expanding our testing offering to include, for example, Oxford Nanopore and Lampore technology. We are very close to aligning ourselves with a leading lateral flow test provider that has a much upgraded system compared to what's out there today. And we do believe, we've got a slide later on that talks about the importance of sort of a screening technology in addition to PCR, and we're going to definitely get into that business. And we've got a pipeline of other offerings under evaluation, including, and we've already validated, a quantifiable antibody test, SeroClear from EKF, and we are ready to go. I think the issue with that is it doesn't seem that the market's quite ready for a quantifiable antibody testing solution. We believe once the vaccine rolls out and they do want to take a look at antibody levels, this will be an important offering. So we're ready to go on the antibody side as soon as we can see the market demand. I should probably say. Building location-based testing. You can see the pictures below. We've got this is a mobile trailer where it kind of opens up and then you have a mobile lab and you can collapse it back up and drive it away. We're seeing increasing need for those. We've got our San Diego facility that we have upgraded to include COVID testing. It used to just have genomics and stability. Now we've got a COVID capability there, which will be up and running in June. And we do see our UK partners wanting to bring some testing opportunities with us to the US. So we're looking forward to seeing that continue the growth as well. Yeah, that slide. Thank you. Just to give you an idea of where we are in this whole process, because certainly we're not announcing everything that we do. We are now managing a large portion of the DHSC mobile labs, vans and trailers, both vans and trailers with different technologies. We continue to be a lead partner for the NHS and private hospitals for testing admitted patients and staff. I did talk about this high street pharmacy chain, which we believe will be a very big part of our business, assuming travel restrictions are lifted. We've diversified our offering. I talked about that before. One thing I wanted to cover is we are positioning ourselves at sites with major airports are putting in place on-site testing where they're going to be doing swabbing, drive-through lanes, walk-up swabbing, testing on-site. That would be an area where we put one of those mobile labs. And that is happening across the UK, and we're very excited to be partnering with our major retail partner, pharmacy partner, to offer that service. And we'll also bring in some capability to do the swabbing on the front side. So that's an area that we're looking to grow. The fit to fly, the test to release, that's going to remain important. That will remain an important part of travel going forward. The RFU contract, we just wanted to point that out as far as the importance of on-site testing I mentioned before, but that's certainly a nice win for us. PCR does remain the gold standard, and we continue to offer PCR, and there is a demand. But you can see at this graph on the right, that you've got the PCR is the dark blue, and then you've got this additional testing, which is gray. That's lateral flow. Now that's lateral flow as it is today, but we see an increased need for lateral flow. And if we've got a test that is with a sensitivity level that's in the high 90s, which we do, we believe that's going to be very important as the government uses more and more lateral flows and sort of uses up some of this old inventory that they have that isn't that accurate. So we're looking forward to getting into that additional testing, which we believe is incremental. So it's certainly beyond just PCR, but PCR will remain an important part of our business. We did want to highlight this Boston Consulting Group study that has come out recently, which talks about the need for testing into 23 and 24. They certainly see remain high after long. The need will remain high after widespread vaccine distribution. The need for testing peaking in late 21, early 22. That's what we're seeing. But continued need in 23 and 24. It certainly won't be at the levels that it is right now, but we're going to continue to focus on this business because it just may be with the variants and with the booster shots that people need that, the need for testing is going to continue. This isn't just going to be a one and done, which I think many people thought, and we even sort of thought at the IPO that this was just going to go away. It may be here longer than we think. We are adopting a broader perspective. I mentioned that some of this is repetitive, so I won't go into that. One thing I wanted to point out is whole genome sequencing. We've got that capability in Nottingham. We've got that capability in Cambridge. So that's increasingly important with this travel, where if you get a positive, they want to sequence the virus. We're able to do that, and that's not something many people can offer. I talked about the SeroClear quantitative antibody test. The accreditation, the ISO 15189 is very important for our customer base. I mentioned that earlier, but it's very important for the government. And we have really screened out a lot of the early test providers that didn't have that accreditation. So we're consolidating ourselves around that accreditation and what it means to our customer base. We talked about expanding into the United States, which we think is going to be a nice incremental opportunity. And one thing we're also going to be coming out with are respiratory disease panels, which eventually, COVID just may be here, and you might have booster shots every year, and hospitals may want a panel of, COVID, influenza, flu type A, type B, other respiratory disease panels or diseases in these panels that we would just offer as one test. And that's something that we're looking at. That's a more sustainable business model going forward.
Okay.
Tony?
Yeah, thanks. So just a couple of sort of high-level points really on the financials for COVID testing, infectious disease testing, as you gather, 2020 was really entirely focused on one offering, and that was a scaling up PCR throughput in one site in Nottingham. And as of the year end, we delivered just north of 750,000 tests. And what I can say is that the average pricing really was pretty much exactly where we thought it would be at the IPO. So we'd indicated a general range really in terms of average pricing of between £40 and £45, ended up at £42.50, bang in the middle. In fairness, there were some that were significantly higher and there were some that were slightly less than that too. But that's where we ended up pricing wise. Gross margin, again, was pretty much in line with what we'd indicated at the IPO, which was bang on 40%. So that's really what we did in 2020, quite clear to see. So I think we can summarize and say, well, look, pricing was robust. I think in terms of supply chain, perhaps that was where perhaps more of the challenges, might have been, and where I think we certainly put a little bit of resource to work in terms of a professional procurement team. So, areas where we did have concerns were Brexit. So we lost a little bit of sleep on Brexit, and I guess there's been some widespread publicity about shortage of certain key supplies like pipette tips, for example. But pleased to say we did manage it pretty well. We had no occasions where we sort of stopped the line and had any outages. So I think that sort of worked out well in the end. But that's where we were in 2020. And I think, again, just turning your eyes to the sort of right-hand side of the slide, looking forward to 2021, clearly, as Jay's alluded to, we're moving away very much from the sort of single offering of one sausage machine that sort of goes faster and faster, and it's now very much a portfolio in terms of offerings, locations, and testing types, etc. So that's really the summary of infectious disease testing. I'll hand back to you, Jay.
All right, and Tony, would you mind driving? I think you're much better at it than I am.
Okay.
I keep missing some slides.
I know we were both trying to do it. Yeah, go for it.
All right. So this is healthcare diagnostics, and this is primarily cellular pathology, as I mentioned before. And for those of you that have not seen this, we'll just go through this graphic because I think it's important. So when you want to look at a tissue sample that's taken from a private hospital or the NHS, they will take that tissue sample and send it to us. We will then take that tissue sample, process it down, cut it up, put it on a slide, send it to one of our pathologists who will take a look at the slide, make a diagnosis, send us back his diagnosis. We then put that in a report and send it back to the private hospital or the NHS. It's very much of an outsourced service. Increasingly, hospitals just want to hand this to an outside provider. We are increasingly that provider. It's very much of a high-skilled outsourced service. Not everyone can do what we're doing, especially as we focus on the higher complexity cases. One thing I wanted to point out on the graphic, which is new, is the Philips digital pathology system, which we have now validated, and we're rolling it out with some of our more prolific pathologists, is going to save us 3 to 4 days in turnaround time, plus the cost of having a logistics team and the carriage cost and everything else. So that'll be a margin improvement. The business was impacted a bit in 2020 compared to 2019. However, pre-COVID, it was growing at 40% a year. It's driven by a shortage of pathologists in the UK and the continuing trend to outsource pathology services, especially with private hospitals. We believe the growth would continue back at that rate. And now you put on top of that this delay in elective surgeries, and we see this being a much faster growth market than just the 40% that we've seen before. We are a leading partner for cellular pathology for the NHS, over 130 NHS departments and private hospital healthcare providers. We have developed the largest consultant pathologist network in the UK outside of the NHS. And again, we focus more on higher complexity cases, which is a higher margin for us. Additional services we have in what we call our ref lab for this bridge between pathology and genomics, which is more personalized medicine. One example is EndoPredict, which if you have breast cancer, it helps determine which chemotherapy is most appropriate for you as an individual patient. That we see moving forward and other opportunities in that area. We really see RefLab doing well for us going forward. I talked about the digital pathology system is now validated. And importantly in this space as well, it's the ISO 15189 accreditation, which really matters to our customers. And we continue to focus on that and build upon that.
Okay, thanks, Jay. So just, again, some summary financials really relating to healthcare diagnostics. And I guess when we think about healthcare diagnostics, I guess the real excitement for us is the ongoing growth of cellular pathology. And I realize that it doesn't sort of jump off the slide, but to come back to Jay's point, cellular pathology within healthcare diagnostics grew 40% 19 on 18, 40% 18 on 17, and in fact grew 80% in the first quarter of 2020 compared to the first quarter of 19. So, clearly we've had a slowdown and it's been, very widely reported in the media. It's really due to, again, the delay of elective surgeries. And in our mind, this is frankly just creating a bigger and bigger pipeline for us. And what we are doing is working hard and gearing up for that return, which we do expect to be in the second half of the year. So that's where we are on cell pathology. I think in terms of reference laboratory, you can see we're essentially 2% down at about just a smudge under 1.7 million of business in 2020 versus a smudge over 1.7 million in 2019. But the important point here is we essentially had a quiet quiet quarter in Q2. So, we were hit by COVID in Q2. So importantly, we've essentially delivered flat revenues in only 3 quarters. So very clearly demonstrable growth in the year. I think the other point I'd like to make is really on gross margin. So you can see we've reduced the gross margin to some extent down to 24% versus 40%. So this has historically been a 40% business at the gross margin level. I think we worked pretty hard actually to mitigate that reduction, because coming back to the point Jay made about our consultants, our pathology consultants, these folks are actually essentially contracted off balance sheet. So we have a complete flexibility in terms of turning them down, turning them up, depending on the actual throughput. So they're entirely flexible for us, and that has helped our gross margin. And I think the other point we can make is that actually we rediverted some of our cell pathology staff over to COVID in the earlier months of getting COVID up and running to very much accelerate the establishment of COVID and the growth of COVID. So that's been key. So coming back to the gross margin, yes, it's been 40% historically. I think, to be honest, we're expecting it to trend above 40%. We see a lot of upside. 2 factors. One is really based on predicted future volumes. We think obviously more volume should create some efficiencies and more margin. But the second point is Jay's referring to digital technologies. We start to accelerate the rollout of digital technology. That's got 2 benefits to us. One is it essentially reduces the turnaround time, so we've got greater throughput. And it also has a cost-saving benefit because we're not paying carriage costs on sending physical slides or tissue samples backwards and forwards between us and consultants. So that is where we see things trending going forward in terms of cell pathology. Okay, back to you, Jay.
Thanks, Tony. So genomics, did pretty well this past year. At the half year, we were down. We were impacted in Q2. NGS came forward pretty strongly in Q3 and Q4, and that's as a result of our investment in the NovaSeq from Illumina and also upgrading our sales team with an individual that knows the space, knows the market, knows how to manage a sales team. So it's been a really big improvement in our NGS performance. I think for those of you that remember the IPO discussion, we had 2019 where we were very busy in the lab. We were doing much work. We had calls for increased staff. And when we looked at the numbers, they just weren't there. And it was a result of us focusing too much on smaller projects. So we made the decision to invest in the NovaSeq to get larger projects and repeat projects. And that is happening right now. So that was a very strong performance from NGS, and they're doing very, very well this year. Sanger sequencing, which is sort of the gold standard for clinical research. It's just not quite as you can only sequence one DNA strand at a time versus NGS that's massively parallel, can sequence millions at a time. It's still a very important part of our business, but that was impacted by the COVID situation a bit more because universities literally were shut down and weren't able to get their research moving forward. So that business we expect to be coming back this year as well. And then again, this demand for personalized medicine that we talked about before, this bridge between genomics and pathology, we are investing in that. We are looking at that. We are building that business, and we're expecting to see some growth out of that in this year and next year and the years to come.
Okay, so a couple of financial highlights on genomics. Again, just to first of all address the revenue position. So we came in at 4.2 million in aggregate versus 4.5 in 2019. And again, Q2, we were absolutely hit by COVID without a doubt. So what we've done is essentially generated the business we have over 9-month period. So again, what you can see is underlying growth, and obviously pleased to see that continue in 2021. I think Jay talked really about the strategic decision we made in terms of investing in NGS and concentrating on higher value, larger projects, which essentially drive higher margin. And it's pleasing actually to see that is starting to pay dividends. So, I mean, just in terms of the gross margin of the NGS piece, for example, it was a rather pitiful 4% in 2019, and we got it north of 20% in 2020. So to be quite honest, there's a way to go, but we're absolutely on the right road. And we should be seeing this business as a whole, and NGS in particular, being 50% gross margin or slightly above. So I think it's certainly on the right road, and look forward to some more positive progress on that.
Stability storage, again, very solid business for us. We like to call this almost an annuity stream, although we were impacted a little bit by the COVID situation on the storage side, where there just wasn't the manufacturing levels that there had been, and there wasn't the development and new products that they put up on storage. It was just too hard when people had to work from home and couldn't visit our facility to do some audits. So it did slow us down a bit. It remains a high margin business for us. Tony can get into that in a minute, but stability storage is a regulatory requirement for drugs and consumer products to be released to market. So this is a business that will be here and is very important in the development of new drugs and new products. Stability storage solutions is about half of our revenues. That's the very high gross margin. We also manufacture and sell equipment for people that want to do storage in their own facilities, which some do. And then we've got a service and validation group that supports that equipment, and that's actually a bigger part of our business, and we're working to expand that. That was also hit a bit by the inability to get out and service equipment. And I think on the manufacturing side, certainly CapExes were stalled. They're not canceled; they're just stalled and delayed. So we are seeing renewed interest in the pipeline that we had coming forward this year and into next. One thing that's important is storage customers are providing longer-term commitments. An average contract is 3 years, with multiple studies and multiple products from each client. So it's a very stable business, good revenue visibility. And certainly equipment sales drive repeat need for service and validation, which I talked about. That will increasingly be a focus of ours going forward.
Okay, just to add a few points. So here's the breakdown really of revenues and margin for stability storage business unit. As Jay mentioned, I mean, the key to us here really is the storage service piece. This is where customers are essentially renting shelf space from us, and by definition, it's ultra high margin. So we typically think of it as being 80%. In fact, we're slightly under in 2019 at 79.4, managed to get it over 81% in 2020. So that's absolutely trending in the right direction, which is great. To Jay's point, this is a great piece of business for us because it's highly visible. Essentially, the storage piece is entirely recurring. We've got visibility through long-term sticky contracts, which is great. And actually, to a degree, the service validation is also either repeat or recurring. So that's really helpful too. And clearly, the service and validation, it has a little bit 5% in spite of the travel restrictions. So ultimately, that's not a bad result, I think. But the key, I think, for future growth on service validation is really the fact that it's only about 2/3 of our installed base that have service contracts. So we've got plenty to go at going forward. And obviously, as the travel restrictions are lifted, we've essentially been, going to be able to catch up some of that as well. In terms of manufacturing, yes, it's lumpy. That's clear. It's in absolute terms, it's a small number within our total, but it is strategically important for us because it is driving that installed base, and that is essentially the gate really to higher margin service and validation work. That should typically be 50% plus growth margin. So we're certainly expecting growth in all of these areas going forward in 2021. Okay, so just to kind of pull the revenues together, I'm not going to grind through all of this. We've essentially sort of seen the summary and the individual makeups of the revenue line. Obviously, overall very strong growth, 153% in core, 139% overall revenue growth, clearly dominated by COVID. So in terms of the COVID impact to us, it was really in Q2 primarily, and it was a 4.2 million overall impact to us of those long-established business lines. We set up COVID as a hedge, and as you can see, it's essentially delivered 8 times the shortfall that we had at 34.5 million. So strong performance there. And I think the other point to make really is that putting aside the cellular pathology work and the return of elective surgeries that is hopefully going to drive that growth later in the year, all the other business units are essentially back to normal operation and back into growth mode. So we're out of the woods on those areas, and obviously expect to see growth in all of these units going forward. Okay, so just a second on the P&L. I mean, we've got some extracts here in terms of the profit and loss account. You've obviously seen the detail on the RNS. We've talked about gross margin. We've talked about the EBITDA growth. Highlights really are very much the expense base. So in terms of delivering that strong growth, we've had very modest annual growth in expenses, about 600K. And I think we can put a fair amount of that actually down to public company costs by necessity. And clearly, strong growth, particularly in terms of operating profit, earnings per share. I think looking at the non-adjusted earnings per share, you can see that that's dramatically different, 5.3 pence versus negative 16. And that's clearly because historically we've had a significant amount of debt. That's all been cleared from the balance sheet. So, going forward, we'll have a purer and hopefully more substantially growing earnings per share. Over to you, Jake, to finish off.
Thanks, Tony. So just a summary outlook. 2020 was obviously a transformational year for the business. We took a business from zero and grew the infectious disease testing business beyond what we could have imagined. Successful IPO, strong growth in revenues and earnings and cash. One thing I wanted to point out that we didn't put a slide in because we don't have anything to report, but I think it's important that we bring this up in the summary, is that when you look at the future forecast, they don't include any acquisition. You obviously can't forecast an acquisition, but we are currently looking at certainly a list of companies. We've got 1 or 2 that we're actually in dialogue with. And from our perspective, the most important thing we can do is, 1, capitalize on this, this evolving COVID situation, but then certainly add acquisitions to the base business that will complement the base business so that when we continue to grow the size of the business. So I want to make sure we communicate that's a priority. We're doing it, but there's really nothing to report, so we didn't put a big slide on it, but just to make sure we're understanding that. The unprecedented need for testing, both short and longer term. We've got Rapidly growing market. Cellular pathology will rebound. We know it. Genomics, we're doing very, very well. Storage, we've got capacity. We will grow that business. We're building internationally. Certainly the U.S. COVID expansion will help us build there and get an increased presence. We've got strong margins, EBITDA margins with high barriers to entry. This ISO 15189 accreditation is very important and not easy to achieve. As Tony said, we've got a strong debt-free balance sheet, capable of supporting both organic and inorganic growth. And trading in the early months of 21 has been solid. So we're expecting certainly a strong year. I think it's going to be more H2 loaded given the travel restrictions lifting in July. But we're still running hard, working 24/7 and growing the business. So I think we'll open it up for any questions if we have any.
That's brilliant. Thank you very much indeed to Jay, Russell and Tony for a comprehensive update. Can I please ask investors to continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen? But just while the company take a few moments to review the investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected to the opportunity to provide feedback in order that the company can better understand your views and expectations. I know you guys haven't had a long while to look at the Q&A, but if I could ask you just to click on the right-hand side on the Q&A tab. If I could ask you perhaps to read out the question, who it's from, and where appropriate to give a response, that would be great, and then I'll pick up from you at the end.
Okay. Okay, so we'll just sort of take these as they come. I don't know how many we've got, but I'll try to do the best we can here. Hang on a minute, let me go up here.
Yeah, if you just scroll down from the top.
Yeah.
And, there will
so is the top the first? Yeah, okay, here we go. Okay.
Yeah, so the one from Sam M in today's RNS is the first question.
Just from Sam, we talk about this 1 million tests. Yeah, that's cumulative from May until March. It wasn't in 2020. So I hope that answers that question. What's the split between public and private sector revenues for 20 infectious disease? Probably 50-50. I don't have it. Tony, do you know off the top of your head?
Yeah, I don't have an exact number, to be honest. I mean, we have disclosed within the RNS, we're sort of obliged to really the significant customers. Clearly, DHSC, has been a very large customer. I mean, that was roughly half of our COVID testing. SPI has been another one. That's basically 10% of our overall revenues. They're the biggest two. I don't have the precise metric, but clearly we're moving to a much more diversified portfolio of offerings, and by definition, we're spreading a lot of the risk across a much broader customer base, which we think is actually healthy for the business anyway.
Okay. Competitive landscape, what does it look like? It's consolidating, to be honest with you. We're one of the leading players in the space. We are securing market share. We won't get into it today, but we've got an important announcement that we hope to make about securing an airport that we'll be doing testing at. So it's consolidating, but again, going back to this ISO accreditation and the customer service that we offer, increasingly people are looking for higher quality providers, and we're certainly one of those. There's a question about pricing. We're not seeing a lot of price pressure. I mean, certainly if you get into higher volumes, we want to talk about maybe reducing some price, but we're not seeing any great price pressure at this point, so we're not too worried about it. I think, do we anticipate COVID deals to be mainly private sector? We think the private sector will be a bigger part of our revenues in 2021. Certainly, the DHSC and the NHS are still important, but we're broadening our presence, as we talked about. We're evolving as this market evolves. I mean, Tony, you want to comment on the cash?
Yeah. I mean, in terms of the cash number, yeah, clearly we've presented December cash. I mean, we haven't. I must admit, we haven't sort of been public with very much specifics on Q1 cash or latest cash as of yesterday. But what I can say is it's absolutely trending north and is pretty much on plan. So we're pleased with cash. It is substantially above the 8.4 million that we had at December. And again, reiterate, no debt whatsoever. So, we are in a good place and we'll continue to grow the business.
Okay. We've got one on Q1. I think I mentioned that our first few months were on plan. So I'll leave it at that. Inventories rose. There's one about inventories, Tony.
Okay.
We're not concerned about redundant inventory. Just to be clear, we're very good at managing our supply chain. I wouldn't want to say we're just in time, but we're close.
No, that's right.
Go ahead, Tony.
Yeah, no, I was just going to throw a bit more colour. So yeah, look, we tend to be less than a month of high value COVID testing. So yeah, we don't think we're exposed in terms of inventory in that regard. I think I might have mentioned earlier, we're longer on some of the scarcer items, but they're typically much lower value. So yeah, I think we are in a good place and we're managing that closely.
Okay, and there's a question about the Boots contract. I don't think we've said it's Boots. It's a major retailer, so we'll just leave it at that. Basically, the MyChecked Health and Your Gene it's slightly different. I think we're looking at having on-site swabbing that'll be sent to our lab in Nottingham. So there's a big push for. I'm not sure Your Gene can do Fit to Fly and all the travel-related services. I don't know what their accreditation level is, but certainly our accreditation gives us the ability to support the travel market. And then there's a question about the government website. Russell, I'm going to let you take that because we've got to clear that up.
Okay, sorry. So yeah, from a government website perspective, the government has specified that the assays that are being used by a provider need to be validated through a UK-based laboratory. We have two assays that we use. One has been validated through a UK laboratory. That detail is now with the DHSC and they are evaluating and ticking that off. The other one, which was the one that we'd originally applied for, had data, but wasn't fully validated through a UK laboratory. However, it was the largest used assay from DHSC and Lighthouse Laboratories. So we had assumed wrongly that would have just been a straightforward tick on the list. However, it's safe to say that the goalposts with the DHSC, and whether it be test to release or 2 and 8 day testing, continuously change. And there are some anomalies on the list that's currently out there of partners that we currently work with who have used our data to get themselves on that list. And that's with data of validated assays outside of the UK. So it's a complex and ever-changing environment, and we are even today in direct contact with the DHST team who are working on that program.
Yeah, I mean, just to sort of summarize what Russell said, people on that list are using us. So it's just more of it's sort of a bureaucratic situation that we are cleaning up. So I'm not concerned about it. And then there's one about Novacyte lost their contract. It hasn't really impacted us at this point. We've got a good relationship with the DHSC, and we expect that to continue.
Jay, perfect. Thank you very much indeed. I think between yourself, Russell, and Tony, I think you've addressed most of the questions that have come through investors. And of course, if I've missed any that haven't come through, then of course we'll make those available to you afterwards. Jay, I know investor feedback is important to you. I will shortly redirect investors to provide you feedback, but perhaps I could just ask you for a few closing comments before we wrap up.
Yeah, thanks, Mark. Thanks everybody for coming on. I hope we answered, your questions and helped support continued interest in Celsius. We are, as I mentioned earlier, evolving the business to support the COVID situation and looking to build a base business. So we're still pretty bullish on the business, and we hope to communicate that. We hope we communicated that today.
Very kind of you. Thank you so much to Jay, Russell, and Tony for updating investors. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback. If you access this meeting from the link sent you by email, you'll simply be asked to log back in, or alternatively, the feedback page, if you access this from our platform, will appear in front of you. On behalf of the management team of SOURCEBIO International PLC, I'd like to thank you very much for your time today. That now concludes today's session. Thank you once again.
Thanks very much, everyone.